All right. Well, happy Saturday and good morning, traders. Good to see all of you here for our Trading Week Ahead broadcast. I'm Ken Calhoun coming at you live here on Saturday. Let's go ahead and start by taking a look at our S&P as usual. And one thing you really want to pay attention to is relative strength plays. Which of the charts have a sharper angle breakout or consistent several weeks in a row breakout for swing trades? And for day trades, we've got plenty of gappers and wide range runners to work with. Like yesterday, Carnival Cruise Lines, DraftKings, and others were winners for our live room members as well. Anyway, the S&P did pull back quite a bit. It's still a down week. So despite yesterday's run, or I should say Thursday and Friday's run, Wednesday was, still remember, Monday and Wednesday, Monday, Tuesday, Wednesday, Thursday, Friday. Monday and Wednesday were red days, and the S&P is still in a pullback territory. It's still not breaking out to new highs. We're not at all-time highs yet unless we break that 42.50. So obvious support that we would want to sell stocks and buy puts and flip short and go into our inverse instruments and all that is 4050 is what I would use, right near the 450, right near the 50 SMA. 4050 is right under this candle here for support. Resistance is obviously up at 42.50. So just big picture number one, the market has still had a down week last week, so it's still in a short-term corrective mode. We're not in a big long rally mode despite it feeling like it the last 2 days. In the back of your mind, you got to pay attention to the immediate week-long trend, which is still down and selling pressure. Now our VIX finally dropped, unfortunately, well, you're trying to play bear side, so we're right under the 20. $20 is the key decision support line in the sand for the market, right? So in the VIX, and so the VIX did touch down slightly under 20 yesterday, though Tuesday, Wednesday, and Thursday it had been up over the 20, which is a strong sell signal to the institutional traders. So we had dominant bearish VIX profile last week, so we're still in a slight bearish correction mode. We're not in a full bore long bias in the stock market just yet because the VIX was strongly up over 20, all the way up to just not quite 30 or near 29. I think it touched right near the 29, and that was back on Thursday. But with a bearish VIX, that tells us we want to be cautious for swing trading next week. Okay, now let's take a look at a few shorter term charts, then we'll look at just a quick peek at my favorite two swing trading charts right now. NUE, I'd mentioned it to you folks. Somebody mentioned here in the room a couple weeks ago, I believe. No, somebody here mentioned ALLY. This is another great chart. Those are two of my favorite charts. The one I just showed, NUE, and this one, ALLY, because the consistent uptrend directional volatility. Oh, big turnout this morning. Good to see y'all here. And if you do have any questions about charts, go ahead and post the tickers, and I'll try and fit in as many as I can coming up later in today's broadcast. That's Carnival Cruise Line sailing away yesterday. My live room members were told we'd go long at 25.8. When it was here before the opening bell, I said, hey, traders, you might want to go long Carnival if it gets over 25.8. Again, for not trading recommendations, but educational use only. But anyway, that was just one of my winning live alerts yesterday. The whole rack of alerts is right there. You can see them, right? 25.8. Not to say I told you so, but that's where I said to go long. And that's one of the reasons the room has been popular the last 21 years now. Just over 21 years I've been teaching traders, and my live room has been popular for a reason. This is an example of a breakout above a previous day's high, right? The previous day's high in Carnival Cruise Lines was right at 25.6. So I had us go long 20 cents over that for a nice big epic $1 win. Ka-ching. Now AMC had been a good breakout on Thursday. Didn't do too much on Friday, kind of chopped around. Is one of our picks. I called along at 13.4, and it ran almost $1 for my traders, up to 14.34, almost 14.40, but it rolled right back down again. So AMC did not hold its highs, although Carnival did. Another chart yesterday that I don't believe I covered. Yeah, we didn't cover Palantir for our members yesterday, but it's one you may want to keep on your watch list next week because it's got that nice 2-day high breakout pattern that I like so much, and it's right near a whole number. This chart illustrates yesterday as did Carnival, as so many others, the whole number strategy, where you go long right above a whole number on a breakout. Say 19. So a whole number is 19. So had you been following this in the pre-market, you might go long. I typically go long 20 cents or so above a whole number to avoid false breakouts right at the whole number. So I wait at least 10, 20 cents. You can see from the alerts there, they're all 20, 30 up to 40 cents even above the whole number for that strategy. And the more important piece of the equation is where to sell. And that's right under the nearest whole number. So again, that whole number strategy, I think it'll really serve you well if you adopt that or start testing it out in your own charts. You go long at say 20 cents above a whole number. Your initial stop loss would be 20 cents under the whole number for 40-cent stop loss. Your exit target would be up right under the nearest whole number, the 0.8 or the 0.9 value under the whole number. So that's really good. Very time-honored strategy, and you may have seen my articles in Stocks and Commodities or my Money Show appearances. Had a really good appearance for Money Show. I had a lot of smart traders asking great questions, and an outstanding moderator, Joe, and the team at Money Show. And I wanted to thank all of you who may have seen me on Thursday for the How to Trade Winning Gaps and Breakouts presentation. 2 hours packed with advanced strategy. So that was a good session. And I enjoyed the questions because they were smart. Speaking of which, hit me up with any questions if you want. We will see. Hey, Margaret, how you doing? Hey, Angeli. Hey, Deanna. Hey, Bob. Hey, Ahmed. Hey, Avi. Hey, June. Hey, Tom. Yeah, a lot of good folks here this morning. Anyway, DraftKings looked a wee bit oversold to me on the swing trading chart, so I called it long yesterday at 42.40. Now, if you're tired of those stupid chat rooms that cover stocks under $10 that are pop and drop, low float, one hit wonder, front run chat rooms where they do all kinds of dishonest things, I would encourage you to try my room instead, because I like to find charts that are a little potentially more consistent, right? Charts that are $3 or $4 are stupid. Stocks under $10 are for morons. People should not be trading stocks under $10. That's for gamblers. They hit and run. They run up and they run right back down again. The smart traders, we like to focus, professional traders like to focus on charts with multi-point ranges where you've got an edge. So this is an outstanding pivot chart, and you may want to, a quick word to the wise, you may want to pay attention to DraftKings, because it got beat way the heck down from 74 down to 40. I was amazed it dropped all the way down to 40. I thought maybe 52, 54, and then it bounced, or at least a chop or consolidation. But no, it plummeted all the way down, and it's a good company, and it's starting to bounce. I know Kramer has talked about it. Anyway, here's your morning question. If we go long in DraftKings over 46, where would you trail a stop? Now, $2 stop at 44, which is my typical trailing stop, I would be too tight. I'd likely get shaken out. But we don't want to give it all the way down to the 30s either. So if you buy, say, 46.20 or 46.5, or pick a number, somewhere right over 46 for play in DraftKings, where would be your initial stop loss and where would be your exit target? Let me know. It's in 40, 39, 4, 32, 36, 8, 41, 42. Personally, if I bought right over 46, 5240, right? Thanks, Tom. If I bought 46.40 or so, I'd put a hard stop. I'd scale out of half of it if it got down to the 44, and I'd let the other half ride as low as 42. but I would not let it go all the way $6 against me down to 40 or 38 or anything. So if you play here, you scale out some there and some there on the balance. That'd be a good professional trading setup on a swing trade for DraftKings. An exit target would be up here at this moving average near 52. So I'd be a happy camper if I get in at 46 and sell 51.80, 52.5, 53 on a pullback. So DraftKings is a really good chart. The other good one for a pivot play is our Bitcoin longtime favorite in the room, Mara. This thing, if you look in, to put it in context, that's the 1-year chart of Mara. This is a Bitcoin related play. And this guy ran all the way from single digits down 4, 5, $6 a share to almost 60 a share. And now it's back down in the 20s. It looks like it might be a little oversold. So Mara may be a good play for a pivot long. If we buy Mara over 24, where would we stop out? I would use the same, what I'm finding, at least that I find is some strategy that I like using is scaling out in 2 increments at progressive levels for trades that don't go against me, that don't go in my favor. So if I buy right over 24, let's say I just start off with, say, 200 shares, I'd sell half of it if it got to 22, another half at 20 even, right? And scale in if it gets over the 26 and the 28. And the exit target would have to be right at that nearest moving average line. Trading within the moving average lines is a good professional approach. Use the 50, the 100, and the 200 simple moving average line. And for pivot plays, you're looking to just play within the band, the nearest band that you've got. So we got 18 to 32 is one band, 32 to 38 is the next band. So if I go long over 24 in this guy, my exit target would be 30, maybe as high as 32. My risk management would be scale out of the whole thing by 20, and I'd start with half of it at 22. So that's a good chart. And if we take a look at some of the exit strategies, let's take a look at DraftKings for the day trade yesterday. $42.40 was my long call for DKNG. And I said to sell my exit, the live exit call was here at 44.20 on this pullback right there. And the reason is oftentimes you'll see these stock charts, they're fascinating. They'll skyrocket up. And when you're making money with them, that's great. The trick is, taking the money and running before the market collapses the trade back down to what you got in at. So this one held its highs, but frequently stocks, as we all well know, it may go from 40 up to 41 and then back down to 40. We're $20 up to 21 and back down to 20. So you really want to tighten up a trailing stop to lock in a profit at the first sign of trouble. And the first place to do that the exit target is right here. And I had my traders tighten up trailing stops as it got here. In fact, I said new traders sell it all now. I remember that from yesterday, for all of your live room members, you remember, right? We had a really good call on this one yesterday. This is DraftKings in at 42 out right under 44 for nearly, over 1.5, almost $2, right? So that was a good move. 42.40, and my final exit call is 44.20. The way it all starts off, if you're looking for patterns, one of the patterns to pay attention to is pre-market inside range gaps. This is called a mid-range gap, and in fact, my most recent Stocks and Commodities magazine article is on that very topic. And look for it on a newsstand near you when it hits the newsstands near you in the next month or two. But anyway, an inside gap. This is a gap that's not a classic gap above the previous day's high way up in the sky, but instead kind of a jumpstart gap. That's a starter gap that's inside the prior day's range for a wide range instrument. It's like this one, 44 to 40 is a $4 range. This one, you don't use that strategy with something that has like a $1, tight range. You want something with a multi-point range. that drops and then does a bounce and then does which this did, it dropped and had a bounce into the close yesterday, or I should say Thursday, then a small inside range gap up on Friday, and then it skyrocketed all the way up to the previous day's high. That's one of the many types of setups that I teach my traders in the live room. You can see how, do the math on how much money you could have made if you bought here and sold up here where I said. Anyway, those are the kind of charts we like to focus on. Because random gap charts, I do cover whatever the strongest looking under $10 stock is, but they usually don't move very far. I prefer like BNGO. This is one that was on our radar yesterday. Had a 520 long call and it ran up to 5.5 or so. But that's kind of a non-event. That's not a really good chart. This was the dominant green chart of the day, was Carnival Cruise Line. So it had a small gap at a 2-day high and ran up for my long trigger at 25.8, and I got us out at 26.60 because of the pullback and the consolidation right here. My long call was what, 25.8, so that's a good example of a round trip. If you want to potentially improve your trading, one of the things I urge you to spend a lot of time on is kind of marking out your round trip durations. So I got us in at 25.8 and out and these are all live calls at 26.6. It's what they call, the piece of the middle. We didn't get the exact bottom at 25.40. We didn't get the exact top at 27.20, but we did get a nice, nearly $1 winning alert for our live room members yesterday from the 25.8 to 26.6. That's all what you're shooting for, is stocks that have a good trade setup that do continue in your favor, and you tighten up a trailing stop, and then once it slows down, take the money and run, right? And then you move on to the next instrument. So those are the kind of charts I like. Another good winner yesterday was SOXL. I called it long on the pivot, and I called the pivot long using my whole number strategy for traders at 30.2. And here's what they had. The initial exit was right here at 30.7, because that was a good 50-cent win. Then I had to get back in over 31 later, right? And that ran all the way late in the afternoon, all the way up to the high 32s. But that's the first place that I said to go long in. Now this illustrates two principles. One is the idea of, again, going in right over whole numbers, as we always like to do. When the trade setup justifies it, we go long right over whole number. Exit target was 31, and we accomplished that and then some. The other strategy that it illustrates is my pivot long call right there was right above that previous day's double top. Right there, you can see right near 29.8 or so. Sorry about that. My Microsoft Security Essentials is lighting up. It's getting its vaccine, I guess. Anyway. Smooth that out of the way. Anyway, does everyone see us? This is the semiconductor leveraged long ETF, and it worked out great for us, right? And the entry illustrates two ideas. One is, look at the previous day's chart, and is there obvious support or resistance, and how does that factor into your trades for the current day? And the other is using strategies that I teach, like going in right over whole numbers, right? And this was a really good example of a long call in SOXL for our members at 30.2, running all the way to 32.2. So ran $2 whole before it stalled over $2, which is a really good run for a $30 instrument. Now, you will not see this kind of consistency by and large for stocks under $10. That's why stocks under $10 are stupid. It's much better to trade charts that have multi-point ranges, even if you trade lighter share size. I'd much rather you trade, 100 shares of this than 1,000 shares of a $3 stock, even though it costs the same amount of capital. The reason is charts like this, very consistent, right? It's a nice, consistent multi-point runner. That would have been easy to scale into, right? A piece of cake, right? You could have scaled into this all day long and then got out on the first sign of trouble, or even at the close and walked out of Wall Street a champion in this chart. So what I'm trying to explain is not only entry and exit strategies, but instrument selection. The stock and ETFs that I like to cover, ones that tend to have relatively good strength from a volatility standpoint and relatively consistent breakout patterns. So I don't like to cover the pop and drop choppy charts that are all over the map. I prefer charts with potential for a lot more consistency, like this one, SOXL. This one, DraftKings. Mara is okay. Palantir is good. And Carnival Cruise Lines, a fantastic reopening play. So lots of good charts to work with. Wow, a lot of questions. Thanks, everyone. Let me see what I can find here. See, I have a bunch of questions. Let me scroll up here and see what I can find. Hey, good morning. Let's see. A couple of questions for tickers. If you have any tickers, let me know. I've got just under 10 minutes left here with you. One thing I would recommend you do is do try the live room. It's popular for a good reason. Someone asking about FireEye, F-E-Y-E. That's a horrible chart. Why would anyone touch that? How about, hint, if it's going sideways, you can't make money with it. So you don't trade stocks that are going sideways. This would be an example of possibly the worst single chart in the entire world. So not to fuss at you, but that's an example of what not to trade. Hey, for a cheapie, I like Chico's actually, the CHS. That one's actually pretty good. That one will play. That one's actually got some juice to it, CHS. For a cheapie, that one I like. I usually hate cheap stocks, but that one actually, I'll play that one myself over 440, so thanks. See, here's a couple of good examples of swing trading charts that make sense. One of you had mentioned ALLY, and thanks to whoever that was, because you nailed it. It was like a month ago or so. ALLY is a wonderful chart. NUE is a wonderful chart. See, those are charts that one could potentially have made a lot of money with. If you compare and contrast that with this chart, this would be a chart in which people could lose a lot of money or not make any money, which kind of sucks. So kind of an eye test. Do you want to trade this or this? Do you trade this or this? Do you trade this or this? So anyway, good questions. See, someone's asking about what? Riot and Mara. I prefer Mara to Riot. I like charts that have good directional volatility and also some degree of consistency. A restaurateur, Yum, that's kind of chopping around up there. Our retailers, L Brands, American Eagle, and Gap stores all look fantastic. Those are wonderful charts. They make perfect sense to consider up at new highs because their trend is consistent. It's a tight, clean pattern. It's not loopy all over the place, and it's attracting new buyers week after week. So those are the kind of charts we want to focus on. Let's see any other charts to look at here. We got just a few minutes left. Penn Gaming's also one that took it in the shorts and may be good for a pivot long. PENN, it's a little pricey up here at 80 a share. But again, not a trade recommendation, but I'd look to get long in Penn over 85 because that's the moving average line that all the professional traders are looking at, and so should we, right? So moving average line, I mean, I'm a professional, but for those who aren't professionals, 85 is the 200 moving average line. If it recovers to 85, then Penn Gaming makes sense. So that's a good chart. Here's another from the epic sell-off, may be good for bounce category. CAN is the ticker. This one is CAN, is in Charlie Alpha November. CAN, you can see 10. I'd use that, just that little tight window, 8 support, 10 resistance. If it gets over 10 and again over 12, I'm going to be a buyer. If it gets under 8, I'm not. So this is a good example of something that had been running all the way up to 40, from $6 to $8 a share up to 40, and then all the way back down to where it started. This is what I call a mountain chart, and oftentimes they may bounce. Best case exit target on this would probably be 18 or so, right? That moving average line. I'd be happy. I'll be happy trading this between 10 and 14. If I can start putting the trade on at 10 and a half, and build a position, and it keeps going up between 14 and 18, that's a good candidate. So in this market, it's important to look for outlier charts, the extreme charts. You don't want to play things that are going sideways or choppy, or very slow trends that are mimicking that of the S&P. You want charts that have much bigger profit potential, much better volatility than the broad market. See, a few minutes left. Let's see, I think that's it. If we take a look at some of the name stocks, Tesla looks horrible. I've been calling Tesla short since it was 8. I'm trying to think. It was somewhere. I first called Tesla short right under 19, and then right under 900, and then again right under 800. So I think I can't remember offhand. It was either 740 or 770, something like that. The short call. And now it's down to 550. That's a perfectly horrible looking chart and would be really stupid to play, in my humble opinion. Tesla, not one I would touch with the 10-foot pole. Apple, on the other hand, still kind of consolidating, but if Apple gets back over 30, I was trading it back when it was near 132 a long time ago. If Apple gets back over 130, but it's been a sideways down selling story all year long, right? Since January, Apple's stock has been slightly down and choppy. So why bother with that? We want to go with reopening plays. That's going to be your retailers, your mall operators, your casinos, your restaurants, your cruise lines, your airlines, all the usual suspects. When people get back out of the house, which I'm looking forward to doing this summer myself, our reopening plays will be alive. So that's Delta Airlines, really nice day yesterday. Carnival Cruise Lines, also really nice day yesterday. And again, this is all coming on the CDC persons saying that we don't have to wear masks if you've been vaccinated. So that led to a big spike in reopening plays yesterday. That's likely to continue into next week. So I would keep an eye on Carnival Cruise Lines, your airlines. For investment grade, I like Southwest best, but for active trading, Delta is really good as well. So keep an eye on your airlines, your casinos like MGM, DraftKings, Penn Gaming, anything with good volatility. I'm going to stay clear of tech myself. The other kind of a laggard sector that I'm keen to re-enter is, of course, our cannabis plays. Because I think Tilray has been beaten all the heck down. It's way down at 14 a share. Had been up at 65. Now it's down at 14. It's still in a descending pattern, so we don't want to get into it until it gets well over 15. I'll probably wait till over 16 in Tilray. Another one that I like to trade is Canopy Growth. CGC, the ticker. Wow, who'd have thought Canopy's back down at 20? It's 6-month lows, so that's surprising, right? Given, back in November, because the politics of legalization and all that, that led to a run in Canopy from 22 to 52, or almost, 57, almost 58 up there. So nearly almost tripled it over doubled in value. And now it's all the way back down. In highly volatile markets, I'll leave you with one last thought. Look at these mountain charts as a second, like a spring that's been loaded and it's back down and it's on a reset and it may pop back up again. So things that have been proven to be popular by evidence of price action and lots and lots and lots of buying, like this one, like that CAN chart, like DraftKings, like Mara. Many of these are poised for potential bounces. You want to play them safe in addition to your directional strong breakouts, which I traditionally prefer in charts that have, nothing but buyers for week after week. That's always the smartest play. The second smartest play, those wide range instruments that ran up, made a bearish cup, like the letter A or a TP, letter A, and it's back down at support, and then starts to pivot back up. That's a good entry because your risk is minimal. You know exactly where your stop's going to be, as evidence of the previous support line. And you've got up to half of the range is usually an exit target to the upside. So anyway, friends, colleagues, active traders around the world, I wanted to thank you all for Echo, stop. Echo, fire photon torpedoes. Echo, fire photon torpedoes. Let's hit the market.
Firing photon torpedoes.
Took it sweet time. Anyway, I'm going to wrap up for today. I wanted to thank all of you for being here. I appreciate it. We've got lots of good charts. And as always, I want you to stay on the right side of your trades. I want to help you make bigger winning trades more often and more consistently. And the way we do that is with more consistent charts and then very careful risk management, trade management, technical analysis, and all the rest of it that helps make this work out so well. So anyway, thank you so much for being here. I do appreciate it. If you're not yet a live room member, you can join me at trademastery.com and join me either for a trial or if you're returning. So many people, they'll stay with me for a while and they go and then they come back and they leave and they come back and they stay for a long time. I've had traders who've been with me over 14 years now. So if you're not yet a live room member, you might want to try it out. You can get a 2-week trial for just 29 bucks. So anyway, take care, and I'm going to wrap up for today. Thank you for being here, and hasta la vista, baby.